Hope you are all doing great and you have some profitable automated bots as I have, as you can see. So for those of you who've been following last trades we made together on previous webcasts, you know about the performance of the bots that we monitor. It's now doing even better. I added OXT, I guess. Yeah, that's the one I added a week ago. That's the Orchid protocol. Not really satisfied with the results as of now because, due to the lack of the volatility on this coin, and maybe I should have configured it with other parameters. So I have 2.96 as a grid step for the OXT. Maybe I should have put a lower gap, so that way I could monetize on these minor price swings we had on this coin. But yeah, it's what I'm showing you now is basically the way you should monitor the activity of the performance of your bots, because that way you know if they are doing good or bad. You can actually compare the results. So let's say for OXT, let's go with $1,000 and let's set the same can I see the trading range? Yeah, and let's set the same trading range pretty much, and let's see if the performance would be worse or better with other parameters. So I think that's the amount we had. It's actually 35 grid levels. Yeah, but here it's oh yeah, because that's the bigger gap. Sure. But let's see now, $1,000 on OXT. But let's set a trading range like this, just for the sideways market. And let's check the performance as if we would launch it with same parameters but different trading range. Backtest last week. So the result would be 6%. Yeah, well, that's compared with my 1.48%. Well, certainly this would be better if I would have opted for the grid setup with 35 grid levels, but in a narrow trading range instead of the one that I have right now. But the reason why I have this trading range for OXT, this wide gap in between the orders, is because I want this robot to trade long term and to lock in big returns, like 3% margin returns. So that's the thing. But the topic of today's webcast is going to be dedicated to the trading station we have here. That's for the manual trade mode. And I'm going to show you some tips and tricks how you can use different orders to quickly jump into the market, how to exit from the market, and what are the solutions you can have to maximize your returns and to secure your position. So let's go. So 2 weeks ago, I think I told you that we are about to add a new feature, and here we have it finally released. That's the OCO, known as the one cancels other. So let's start with this one. Okay, that's like the hot feature we have as of now. So if you move your cursor on the question mark, you will see that it's just basically cancels out if a certain condition is met. So for example, let's say I set limit buy order. Let's say I want to buy OXT at the price of 0.37, and let's say I want to buy 10% from my entire balance, like available balance to be precise. So you would notice that you can now optimize the OCO order. but for that you need to have some open orders to play with, okay? Because as you see, the condition is that it's going to be linked with another order. So once this limit buy order that we just set for OXT is being triggered by the market price, so once the price hits this price level at which we set the limit buy order, this will cancel out some other open orders that we could have. So as now I don't have any open orders, let's open any random, let's say on 1 inch to USDT. So let's say I don't know if okay, so let's say I have 2 coins in the list, and I have only $100, okay, that I want to allocate either to 1 inch or either to the OXT, for example. So the first one that hits my price is going to be added in my portfolio. And of course, I want to cancel out the other one because I already spent $100 that I wanted to allocate either to this coin, 1 inch, or OXT, okay? So here how I would do this. So for example, 3.2, that's the price. And let's say I would want to spend $10. And this would be my limit buy order, okay? Okay, let's set 11, whatever. So now you have this open order, which is waiting for the price to fall back down to 3.2, and that way it's going to trigger this order. And also, as I said, I want to make sure that if the price of OXT falls quicker to the point at which I want to buy it, then I want to have this option. So let's go OXT, and let's set limit buy order here at the price of 0.37, and let's set 11, no, not 11, let's set $11 here. But this time I want to make sure that my OCO is on. And okay, well, I don't have open orders, that's strange. It might be lagging. The last time I checked this feature, it was working perfectly, so as of now I don't see a reason why. Let's maybe update it real quick. Okay, that's really strange, because I actually have this open order pending. It's really strange. It shouldn't be like that. It should display me 1 inch position that I can select and cancel. It will be cancelled out once the OXT order is filled, okay? But for some reason I don't see it now, which is really strange, because I tested this before, like 3 hours ago, just to make sure it works, but yeah, for some reason it does not. Let's then come back to this feature later. Hopefully it's gonna work again. Maybe it's just undergoing some issues due to the overload or whatever. I don't know. It's just strange that it doesn't work as of now. But yeah, let's not waste time. You also notice that apart from the limits and market orders, we have stop order. But let's go step by step, even for those who are newbies in that. And I will just quickly explain to you each order. So limit buy and limit sell order, that's like the order you can have if you want to enter or exit the market with the minimum fee you can have. So for example, you can go on Binance and check the fee, and you will see that for the market buy or sell orders, you're gonna pay larger fee. So that's exactly over here. This maybe that's not the best page to show you. I think there was even a better one. Not this one. But anyway, for market orders, typically on exchanges, on centralized exchanges, since market orders, they are of the first priority, and for being in the list of first priority, you need to pay a larger fee. So usually you only use market buy or market sell when you need to enter the market or exit the market right now. So that's the time when you would use, and for this speed you pay a larger fee. Whereas when it comes to limit buy or limit sell order, you are basically a market maker, and that means that as a market maker, your order will be placed in the order book, so it's going to be visible for the rest of the traders or portfolio managers out there on the market. And then the way people can see what's the demand and supply on the market, and that way market becomes more or less transparent. And since you are now the market maker, then you pay a lower fee. Sometimes on some exchanges it is even a negative fee, so that means that actually the exchange pays you for that. So you would use limit buy or limit sell order when you don't have you are not in the rush to enter or exit the market. You'd rather wait for some price to for the market to reach, and then once it reaches this price, you will enter it automatically. So for example, I want to buy OXT at 0.37. So it can be 10 minutes until it reaches this price, or it can be a few days, it can be even weeks. That's the thing. It's a pending order, and it's going to be triggered only once the price hits it. As simple as that. So now you have this stop limit, which is a bit more complicated than a typical limit order, because you now have this extra information that you need to feed the exchange with, and it's also known as the conditional price. So for example, I want my exchange to set a limit buy order only if it at first reaches, let's say, 0.42, and once it reaches this price level, so that's our condition, I want it to plot a limit buy order at the price of 0.4, for example. So why would I do this? Why not setting 0.42? Well, that's because I think that once it reaches 0.42, I believe that it's gonna fall back a bit, and that way I can buy the OXT at a better price, at a lower price in this case. So that's one case scenario you can use with a stop limit, because you set the condition. Once the condition is triggered by the market price, it automatically activates the order itself, the limit buy order. Okay, so once I click buy, you will now see that my order is plotted where the price is 0.42, but once the market price hits it, it's going to plot a limit buy order at the price of 0.42. Okay, so that's the thing. Let's check real quick. Okay, for some reason still doesn't work, but anyway, let's go back. And the same applies to the stop limit sell order. Let's remove all the drawings here and let's cancel this order out. So for the stop limit sell order, it can work the same way. So for example, you want the price to break the resistance at first. Once it breaks it, and you see that the price is now trading above the resistance for, let's say, the next 2 days, you are now confident that you can expect the price to climb even higher, and that way you can sell your OXT at a higher price, for example. So what you're gonna do, you're gonna put your stop at 0.39, 0.65. That's where we have our resistance here. And then you want it to activate a limit sell order at a higher price, let's say 44. So that way, by doing this, you expect the market to at first reach a certain condition, and the condition that we said is reaching the resistance line, trading above it, and then hitting the price of 0.44, and that's our conditional price. And once it's being triggered by the market price, it will plot a limit buy order at 0.44, which is somewhere, oh sorry, 0. Yeah, exactly, 0.44. So this is where it's going to set the sell limit order, and it's going to sell at OXT from your balance. Okay. You can play with this order in any way you want, and you can combine it with some other orders as well. So for example, you can even set a stop loss in advance for this stop limit sell order. You can set stop limit buy in that case, for example. Well, basically, if you are trading futures market, that's how you can use it. But yeah, I mean, the only difference from the ordinary limit buy or limit sell order is that now you have this conditional price, which once the market price meets this condition, it's going to execute the order that you want it to plot. Okay, so that's the thing, how you can use the stop limit. The stop order is, well, honestly, it's like my favorite one, I would say, because that's the order that you really need. Then you anticipate a certain price movement, like a crazy price movement, and you don't want to skip it. You know that if you anticipate a strong rally, and let's say you plot your stop limit buy order over here, okay, then there is a huge chance that it won't be triggered, because as you know, market orders are of the first priority, and of the second priority you have limit orders. So it can be that there won't be any liquidity on the market to execute your limit buy order, because the whole volume was captured by the market trader, traders that been executing limit buy and limit sell, market sell and market buy orders. And that way, when you use limit buy as a stop limit, there is a chance that you will miss this, you will skip this rally. So if you don't want this to happen, which can happen if there's a huge market rally or huge market drop, instead you would plot a stop buy order. And let's close this one. And let's reload the page. And maybe let's use another example on another coin, maybe Ion trading to USDT. So let's say that you found a certain formation on a chart, and let's say you expect the price to breach this angled down resistance line, and you anticipate that once it breaches it, other market participants will buy this coin like crazy, which will move the price to the moon. And you don't want to skip it, so you're gonna plot stop buy order at the price of, let's say, 0.1 maybe. No, actually, let's put it a bit higher, 0.3. and you want to buy 25% from your available balance. So as you click on buy ION, it's gonna execute a market buy order at this price, at the time when the market price reaches this price level. So that way you're gonna pay a bigger fee compared with the ordinary limit buy order, but your market entry is pretty much guaranteed here, because that's the first priority order, and that way you don't skip the market rally. But for that you just pay a bigger fee. That's the thing. So that's why I really like this order, especially that I expect some kind of extreme volatility on the market, and I'd rather stick with stop buy or stop sell orders, because I know that even though I pay a bigger fee, which is relatively bigger, it's not that big, like by 95%, I would say it's guaranteed that you will be, like, your order will be executed, because that's the first market priority order. Okay, it's kind of for you to stay safe. Okay, so yeah, well, that's pretty much it about the orders we have, like the limit buy, limit sell. The market buy and sell, it's really straightforward. If I, let's say, want to buy 100 ions right now, it's gonna buy it right now at the market price. Okay, and the stop one we just covered, stop limit also covered, and also we have some additional order types, like the shadow order and the TVAP. So the TVAP is let's say you don't want to buy Aeon right now okay, let's say you wanted to allocate 10,000 not 10,000, it's what's 70, no, it's around 55. So yeah, that's around 55, maybe even 56. Yeah. So let's say you wanted to buy 56,000 Aeons, which is like $10,000. But you don't want to buy it at one price straight away, because, well, if not the case for Aeon, but for other coins that have low liquidity on the market, this kind of huge order could move the market crazy, and you would not end up buying the coin at the best price because of the low liquidity on this coin. And instead you'd rather buy it proportionately. So you can buy 56,000 Aeons in 6 hours in, let's say, 40 orders. No, 40. So that way it calculates that per each order it's going to buy you 1,400 Aeons, and it's going to execute these 40 orders within the time period of framework, of 6 hours. And that way you kind of spread your investment, so the price can swing, and that way your TVAP will execute your order here, and then at a lower price, and then the price rises, it will buy at a higher price. But eventually you spread the risk, you don't put a lot of pressure on the market if that's a low liquidity coin, and yeah, in 6 hours you buy what you wanted. It's actually a great tool for portfolio managers that manage huge portfolios, like sometimes $10 million, $20 million. And let's say you want to buy some coins like Akash Network. So for those of you who know this project, you know that on the market there is not that many coins traded publicly, because around 80% or something of Akash coins, they are in locked staking and in the possession of the team. So it's a kind of a low liquidity coin, and some huge buy orders, like a couple of $1 million, it can really put a huge pressure on the price. You can drive it like crazy on your own. So to avoid this, you'd rather spread the volume over time and over some multiple orders. So that's how you can use the TVAP. The same way with the sell. If you need to sell this huge amount of aeons, for example, then you can sell it within the next 7 days. So each day it's going to sell a portion of it, but that way you kind of gradually get out of the market. So this can be an option for you as well. Yeah, so that's pretty much about the orders. What I like about the limit buy order or limit sell order is that you can set multiple take profits. So for example, why is that? Order positions. I'm not sure why it's not loading this order we set with you. This yellow one, it should be here in the list. I mean, for some reason, I don't know, like maybe you guys can explain to me, but only on Webcast it happens that you try to show something but it doesn't work as it's supposed to work, because literally 2 hours before the Webcast everything worked perfectly well, but as of now I don't see my OCO orders, so I cannot show you for some reason. Maybe let's try again real quick. Let's say I want to buy this at this price, $20. Buy. Yep, so that's the order. And let's say I want to set another one on 1 inch to BUSD at $3.20 in total. Okay, maybe. Yeah, it's still, you see, it should show me my open order, but you see, it says you don't have open orders, but in fact I do have open order here. That's the one we just set. Aeon trading to USDT. It should show me it displayed here, so I could select it and it would cancel out if the 1 inch order is being executed at first. But yeah, unfortunately I cannot show you this, so I'm gonna, like after this webcast, I'm gonna go to the IT department and tell them that what the heck, the guy's been waiting for this feature but I cannot show it to you. So yeah, I promise you that I'm gonna make my best to tell them that it's a bad thing that on the webcast I cannot show the order, like the new feature that should be working perfectly. Okay, but yeah, let's go back to limit order in that case. Let's go to maybe Alice to USDT. Yeah. And sorry for my voice, I think it might sound a bit weird because I got sick a bit, have a sore throat, so it might sound like not my typical voice if you compare with other webcasts. But yeah, anyway, still hosting this webcast for you guys just to show you some tips and tricks. So yeah, I mean, you know that I follow this rule, which is like, first you allocate 50% to automated bots, next one is 20% to smart trading, and that's exactly what we are discussing today. That's the smart trading, using this manual trade orders like limit buy, market buy, stop limit, and the rest goes to hodl strategy, just buy crypto and hold it. So you know that in the smart trade mode, to which I allocate 20% of my entire balance, you have this perfect thing as multiple take profits. You can set up to 5, and that way you increase the odds that you will get out of the market with at least some profit. Because for example, if you set just one take profit at the target price of, let's say, 20%, Oh, sorry, 20%. It should be here. And let's say $15. No, that's $1,000 at the price of $13,000. Yeah, so that way you need to wait for the price, and actually that's 40%. You need to wait for the price to rise by 40%. No, from that point, 40% to lock in your returns. So why would you risk that much? Why? Because you see, the chances that the price will reach 40% are slightly lower than if you set multiple take profits and spread your investment. So for example, instead of 40, you said, I want to sell 20% of my entire position once the price rises by 10%. Once it rises by 15%, I want to sell another 20 of my position. Once it rises to 25%, maybe, this time I want to sell 30%. And the rest is left for the highest take profit, which is 40% from the initial price level. And here I want to sell the remaining, which is 40%. So that way you kind of spread the risk and you increase the odds of getting out of the market with some profit, because you have multiple orders to get out of the market. So the closer you set them to your entry price, bigger is the chance that it will be triggered. Okay, so instead of waiting to sell everything at the price which will rise by 40%, it really makes sense to spread the risk, get a bit less from the market than you would otherwise get if you would have only one take profit at 40%. But the trade-off here is that, once again, you increase the chances of getting out of the market with at least some profit, because it may never end up reaching 40% of the price growth. It may, let's say, rise to only 25%, which is like the third layer of your take profits, and that from that point it will fall again, for example. Okay, so if you would trade only with a one take profit, you would be in a loss in that case, because you didn't actually realize any returns out of the market. But when you have multiple take profits, like we have now on this chart, that way we would have sold 20% at the 10% of the growth, 20% we would sell at the 15% of the price growth, and 30% we would sell at the price growth of 25%. Okay, so we would be out of the market by 70% already. See, 20 plus 20 plus 30, that's 70%. We would stay in the market with the remaining of oh, actually, you see, it's a wrong calculation. It should be 30. Yeah, so in that way we would be left with only 30%. So that way you can maximize your returns by spreading but by having multiple take profits, you increase the chances of getting out of the market with some profit, and also you minimize the loss, because, for example, in this scenario where the price rises by 25%, but you don't have these take profits here, you have only take profit at 40%, you see it falls from that point even lower, below the entry price, and that way you are by 100% of this entire position in a loss. So with multiple take profits, you have a better market strategy, because you spread the risk, and that way you maximize your returns, because it realizes some profits from the market by executing this first, and then the second take profit, and then the third take profit, and that way you get out of the market with some profit, which will eventually offset the loss that you would have incurred with the remaining of 30% of your position which was not sold, as the price did not reach 30% of the price growth. Okay, so these are some tips and tricks you can use. I really like this feature we have here, having multiple take profit orders, because that way you really split the risk and yeah, increase the odds. And most importantly, it even calculates the potential return. So if all of these take profit orders are triggered by the market price, then your profit is going to be 331 US dollar, USDT in that case. And the same way you can have your stop loss to show you the potential loss you can have. So let's say you set your stop loss here, your entry price is where you have this yellow line on the chart. So that's exactly minus 17% from the entry price. So you risk to lose $180 for the reward of $400. So you can even, let's say it's not 17 but maybe 20. So if you divide the potential return by the risk you take, it's going to be a ratio of 2 to 1, which means that for $1 you risk, your reward is going to be $2. And that's the rational trading, because when your potential return exceeds your potential risks, it means that this trade is worth it. But you need to make sure that market conditions are favorable and that there are big chances of the price to trigger your take profits. If they are too far from the entry price, I mean, the chances are way lower in that case. So you also need to take into account the fundamental aspects of the coin you selected to trade. You need to be really sure that it's gonna pump, and you also need to make sure that you don't put all the money in one trade. Don't forget about the diversification. So don't forget about other coins, don't forget about other strategies. That's why I have this split. 50% goes to automated bots, 20% goes to smart trading, and the rest goes to hodl strategies. So we had this market sell-off, as you remember, as of the 7th of September. So we all incurred some loss here if you were trading back then. But thanks to automated bots, they kind of offset this impact, this negative impact we had in the next 5 days, because you see the market has been trading sideways, and that way it gave our S-bots opportunity to make money. So for example, my algo trade is doing just great. See, 99% in 1.5 months. That's insane result. So not only did it peak that high, but also you see the price been moving sideways for quite a long time here. And we know that on the sideways market, SBOT is like the best one. So that's why you see it managed to capture all this market price